Hi everyone, and welcome to the upcoming week's analysis on, we start off on the fundamentals for last week and this week. So pretty much we still have risk off, more risk off than risk on in the week ahead as far as the Fed fundamentals. We've got the Fed, Bank of England, and Bank of Japan will be deciding on interest rates next week, but no changes are expected. So on for Fed, Bank of England, or Bank of Japan. Other important releases include flash market PMIs, housing data, current account, UK inflation, and retail trade. That's going to be important for the UK inflation. But again, I think everything is more to do with Brexit, especially with Boris Johnson probably leading. Well, he is leading the contest, and he's apparently he said that he's going to basically honour if they don't get a good deal, better deal, then he'll leave Europe. He'll leave Europe in with a hard Brexit, I guess, if you want to call it a hard Brexit, but with a no deal or WTO Brexit. So I think the market's going to be a bit worried about that in the coming months. So Eurozone flash consumer confidence, Japan trade balance, inflation. That's important as well. Inflation, if they move further away from the 2% target, it's not going to be great for Japan, especially as well with their trade balance, because obviously that has an effect on GDP, the economy, and flash Nikkei manufacturing PMI. So again, that's to do with inflation, and Australia first quarter house prices. So some potential market movers. Let's look at Fed Reserve. Fed Watch tool, and 76 at the moment anyway. 76.7%. I think no change, and 0.3% a ease. I think there's going to be an ease. So the odds are in the favor of a rate hold, and in the July meeting, they think that in July there's an 87% chance at the moment anyway that there's going to be a rate cut. So if you're looking at if you are looking at getting short on the dollar, don't know whether you should, but there's always opportunities to buy the dollar if it does fall, because there's not a guarantee that this is going to happen right now. This obviously can change when it comes to biases. So if the bias is for a rate cut and an ease, and you start to see the dollar falling, what that does is that can bring prices to where you want to be a buyer, especially if they don't end up easing in July. So that might be a decent buying opportunity. So expect maybe if you are in any dollar potential trades, look to probably trail your stops. And if you get stopped out again, just look for more shorting opportunities as prices get cheaper for the dollar. So ECB on the other hand, from ING, last week's meeting in Vilnius, ECB President Mario Draghi sent a strong signal that the ECB was only one small economic slip away from new stimulus. So there we go. They're doing worse, and everything I keep saying regarding fundamentals and the fundamental analysis spreadsheet is pretty much, if you read the news, this is basically what is happening. The dollar might be weak, but when you compare it to everything else, and let me bring up the fundamental analysis spreadsheet. Regardless of what you say about the dollar being weak and interest rate cuts, comparing it to everything else is the euro area is number 6 if this is updated, or edit was last edit was made 12 hours ago. I think that might have been by me, but if it wasn't, then we just update it into Sunday, Monday, etc. Make sure this is up to date, but it's number 6. So remember, they're going to be the most affected by a weaker dollar. They don't want a stronger euro, so they're going to do things in order to create a weak euro. All right. So and they said it's just one small economic slip. Basically, if Germany continue to shrink and bad news comes out, then yes, they could start to announce stimulus to weaken their currency, meaning that the euro is really a sell. Sentiment wise, you've got Donald Trump for the dollar blames Iran for oil tanker attacks as it happened. So oil tanker attacks, the US are ramping up the rhetoric. Market watch are going with at the moment 5 things to watch in the pivotal Fed meeting. And Fed may break a lot of stock market investors' hearts next week. So what that's basically saying is that if they don't cut rates, then the stock market don't get to borrow money for cheaper, right? For a cheaper rate. So that's what they mean by stock market investors' hearts, breaking them. Cutting rates tends to lead to a higher stock market. The rate cut the economy doesn't need, but the markets do. Again, that's tying into the same narrative where even though you've got a bit of low inflation on the dollar, right? If we're looking at the dollar and we're looking at inflation rate 1.8, it's still third, compared to United Kingdom and where is that, Canada, right? Who's worse? You've got Japan, you've got the Euro area as well, and you've got obviously Switzerland. They're much, much worse when it comes to inflation. So the economy is doing better. So the economy is doing the best. So if the economy was shrinking as well and it was quite poor compared to the others, then I would say probably but the economy is still holding up year on year, quarter on quarter. So the economy doesn't need a rate cut just now, and hence you're seeing that reflected probably in this. But I guess the market is, trying to price in, let's say for the 19th of June, but for the 31st of July, I guess they're trying to price in some sort of interest rate cut and betting on the US economy going down, which kind of makes a bit of sense because obviously trade wars, and the effect of China trade wars on the US economy, it could have an effect. And then if you start to see United States GDP, quarter on quarter, month on month start to come lower data figures, then that ramps up the the chances of a rate cut. But as long as the GDP quarter on quarter is good and month on month continues to be good, then it's decent. Again, Saudi, this is from Reuters, you've got Saudi seeks oil supply protection as US and Iran face off. So the US are getting themselves involved in this dispute and this attack. What else was there? Saturday, Sunday, right? So pretty much we've kind of just gone through that anyway on the on trading economics. So from a risk off perspective, we know that we should be really, if you're looking to trade risk off, there's 2 ways you can look at it. You can either trade risk off, or you can look at risk off as driving prices to where you want to be a buyer if you're buying any kind of commodity, currency, etc. So if you're trading risk off and you're shorting, or you're buying the yen and the Swiss franc, or you're going to not trade the yen and the Swiss franc, and you're going to wait for prices to come back down to a level on a stronger currency pair fundamentally, and look for buying opportunities. So what I mean by that is, Japan is 5 at the moment, Swiss franc is 6, so you'd be looking at United States 1, maybe New Zealand 3, Canada 4, and when you start to see pullbacks on, say for example, the CAD Swiss, then you would be looking at buying a CAD over the Swiss franc when risk comes back on or less off. But let's get into the technicals. So Aussie CAD, this is near enough, I wouldn't say picture perfect, but it's a good technical setup, but it just depends on the currency you're going to be buying. So if you're buying at demand, you're buying the Australian dollar over the Canadian dollar. And I don't think this is a great idea. Fundamentally, you've got two commodity currencies, but the Australian dollar is number 8 and Canada is number 4. So not necessarily a great idea to be buying the Australian dollar unless there's something really important news that's coming out for the Australian dollar that could turn it, to the upside. But I don't think there is, apart from, I think it was really only Australian first quarter house prices. So, and there's really no CAD news to be mentioned. Let's go to Forex Factory. Let's just do non-Aussie CAD. Apply filter. What's going on this week? So you got monetary policy meeting minutes. You got CAD CPI, so that could be a bit of a market mover, especially if it comes out lower. So that's decent. CAD core retail sales as well, but I think the CPI might be one which keeps the price within this 92 range, between 92 and 94, if you know what I mean. If inflation comes out terrible for the Canadian dollar, then that's not going to necessarily increase the Canadian dollar's strength. It just means that there might be obviously a range in market, but is this really the pair you really want to be? Do you want to be buying the Australian dollar from a fundamental position? Again, that's a question for you. But technically, brilliant zone. You've got trend line breaks, you've got higher highs, higher lows. Only thing price didn't do is take out any kind of previous supply, but nice hard in, hard out price movement. Trend line breaks, etc. And I do like it. From a technical perspective. We've had a touch here and then spike through. That 92 round number tends to be manipulations around round numbers. So again, I like it, but if I was going to ever trade this currency pair, it'd probably be down at the 91 level around here. As you can see, we've got a level 1, 2, 3. I think this might look like a bit of a stop hunt where you have a move, go something like this, like that, and then that's a nice fresh level of demand. So could see a bit of a fake up, then a move down, taking out all the stops into that demand zone, and then a move up if you're looking to buy the Australian dollar. Remember, the Australian dollar it's not going to stay 8 forever. So it's just anticipating when potentially there's some market, some really important news for the Australian dollar that will or really bad news for the Canadian dollar that may turn prices around. Aussie Swiss, you can pretty much see that the prices, really didn't, do anything as far as any buy trades, risk off. You can see, where prices and the effective risk off on prices. Really, no one's really buying the Australian dollar. Swiss franc is going to be the risk off currency, so you can see where prices have really been coming down. You do have various different levels of supply. So if you are looking to get short on this currency pair, I'd probably say this zone here, this 69, this 69.5, around that level there, up to around that 0.695 to 0.7 would be a decent area, as we do have some support, resistance, support, bit of resistance there, bit of support there, a little bit of support, resistance. So where you got that kind of fair value as well, from that range high to that range low, so literally around here, I would say, for a pullback, and then looking at any kind of short trades. As for a risk off trade, again, risk off, you can see what's happening here. Risk off. So again, if you are trading risk off, look for move really up to here before getting short again. Again, just apply the odds enhancers. All right, so if you've got any kind of odds enhancers at that level, so remember, look for any kind of hard in, hard out price movement. Does supply take out demand or demand take out supply? Trend line breaks, round or half numbers. Got a CPR process, forced willing supply equation. So looking at horizontal, diagonal, and dynamic support and resistance within areas of supply and demand zones. And then we got our stop hunt analysis as well. So just make sure that you're applying everything to certain levels, as well as obviously fundamentals will give you the and risk sentiment will give you the bias, right? So if we're looking at that level there, you can pretty much see that there was a bit of a level there. Let's maybe go across, maybe a bit higher. Yeah, I'd probably say something like that. Somewhere within that zone anyway. 76 and just below that, 76 and then 75, 60. You're probably looking at any kind of shorts around there. If you're looking to trade risk off, risk on. If you're trading risk on, I'd definitely say wait for a trend line break. 3 candles. If you can take out any kind of supply zones, even better, and then wait for price to come back down into these areas. It might take a couple of weeks, to be fair, because risk has been off for quite a while. But again, a trend line break indicates that the market is going from a downtrend, and the market state is going to potentially change to a ranging market. But we need to see enough demand in that area. So, for example, with the Aussies in the Aussie Swiss, right? There was, you could say that was there was 1, 2, 3 candles, open, high, low, close, right? Beyond that trend line. But when you look at the amount of demand beyond that trend line, we didn't take out any kind of supply. It's a bit kind of hard in, a bit hard out, but there just wasn't any strong demand. You can see it here. It failed. So again, as an odds enhancer, you do want to see prices start to take out supply that proves that there's going to be some sort of demand there if you're looking to buy the Australian dollar. Plus obviously you'll be looking at the news. Aussie, New Zealand. So Aussie, New Zealand, there was a decent trade this week into the lower end of this supply zone. 2 candle swing right there on the 4 hour, trade it down to the lows. I think going into this week, the Aussie being, I think it's number 8 now. It's number 8, but I'll get rid of that anyway. And then I think the New Zealand dollar is still number 3. Still looking at short trades with a commodity currency. So if anything, I'm probably looking at move this level up a little bit, I think. Yeah, so we got level, resistance, even though it spiked up, I think the resistance is still there. Yeah, you can see it, 1, 2. So if we do get prices come up into, I would say, this area here, and then we get an extreme, so RSI extreme, and a bit of volume divergence as well, that'd be a nice entry. If not, really good, I like this entry up top, up here. So if the Australian dollar starts to rally against the New Zealand dollar, this was actually a rate cut for the New Zealand dollar, right? And there's a lot of people still caught in their positions right here. So I think if prices come up to here, anywhere really around the highs, and you start to see, prices turn around, that is a nice short trade here. It's not any kind of algorithm. It's not something that's done where it's like kind of fake volume. This is real people buying this, because that was an interest rate cut, and it's supposed to go higher, but it went the wrong way. So it's caught a lot of people out. So those are your buy trades. Sell trades for the New Zealand, or buying the New Zealand dollar and selling the Australian dollar. Just my opinion. If you do want to get long in this currency pair, then that would be where demand would be. And really, this level's been touched a few times, so it's not necessarily the greatest if it starts to come back. It's broken this trend line here, but it's got 1, 2, 3 open, high, low, close. Hasn't taken out any kind of supply. So right now you'd have to really kind of see prices go all the way up, then kind of come down into this zone before looking at some buy trades, or maybe on a lower time frame you might want to see a stop hunt. Right, Australian dollar, US dollar again. US dollar being number 1, the Australian dollar being number 8. So why you would want to buy here? Not necessarily the best trade or the smartest trade. Not to say that prices couldn't go up, but it's not the highest probability trade. Maybe into this week you could get some dollar weakness, with the expectation of, I wouldn't say necessarily a rate cut, but if this starts to increase, then potentially what you're going to see is prices start to probably roll back, and we are at the bottom of a range, so the market will probably end up waiting before it makes its next move, where it wants to go higher or lower or stay in that range. It will probably start to it may start to just range here until there is some sort of catalyst that pushes prices below what we would consider a bargain area for the Australian dollar, or a previous expensive area for the US dollar. So at the moment this is proven to be expensive, and this may be expensive again for the US dollar unless it has something, a catalyst to kind of push it, where traders would think that this is an actual bargain for dollar prices. So let's wait for that. If you are looking to try and get in on the US dollar, then this is pretty much the first place you're looking at getting short. If not, then it's really going to be about either at this, again, round number 0.7, or preferably a bit higher around here is what I'll be looking at. Some short trades, but this was a decent trade last week. It's just taking that after there was such terrible numbers on the non-farm payrolls, way below expectations, 75,000 numbers, but technically great trade, great trade. Just didn't take this one. I was saying to a couple of traders that had been the level, I guess, the numbers had come out as expected, maybe about 160, 170,000, then that would have been a definite sell. But because it was such a low number, I think it was the worst number in maybe a year or two, it was tough to take, very tough to take. But if you do find yourself in that position, I was saying that you could potentially just even trade 0.1, 0.2%, maybe one position, and just see how it goes. It's not going to necessarily lose anything, but you can always add in if prices start to go in your direction. CAD Swiss, we've come up into this zone here again. Bit of risk off trade. It's a bit of a funny one as well, because you would think that the Canadian dollar would potentially strengthen, seeing as there may be supply issues, but risk off sentiment is overpowering any kind of supply and demand issues that would affect oil, therefore affecting the Australian dollar. You also had a bit of resistance there as well. If it was to just draw like this, there you go. So there was some confluence there. Did we have any moving averages in that area? Yeah, there was moving averages as well, risk off. So definitely decent trade. The first time is, these levels, these dynamic moving averages have touched since prices have kind of crossed below as well. So 50 moving average, the black line. So decent trade. If say decent trade, but if you end up getting in short potentially, that could be looking like a decent trade, depending on if you got in anywhere around here. The Canadian dollar is pretty decent. Probably one of the best performing commodity currencies. So a decent short from a risk off trade perspective. From a risk on or less risk off, then you're looking at a move really back down to this area here to look for any kind of buy trades. I'd probably want to see prices come a bit deeper. This is all right though. Let me just get rid of that. I think this area here is okay. Got another level just below that as well. So I think maybe that lower area is probably a better one, but decent here for a long. If not, then probably just below that 0.735 level and below. It's all right for a buy, but again, you have to make sure that risk is more on than off. CAD yen. So CAD yen, decent trade again. Prices come up here. I was saying that this is going to be a lower time frame CPR zone right here. If prices came up to here, then I think that was the very decent short. As you can see, the yen has just been strengthening on the risk off. The yen strengthens more than the Swiss franc in risk off environments. It came out to the 82 round number, and then it's sold off. But I think if prices do come up here and risk is off still, then that is a very, very nice trade. I also did point out that you could trade the underside of the level. You got a bit of resistance, bit of resistance there. Price come up into this level round number again and sold off. So yeah, decent trade to the downside if you're looking at buying. So again, you'll be waiting for prices to really kind of come down here, and I do like this hard in, hard out, especially because you've got a bit of a CPR zone, nice CPR zone as it goes. Look at that, 1, 2. Pointed this out last week. That looks like it's holding, and then boom, breakout traders definitely in, taking out all the stops, and then you have prices come back to that level, look like they're selling off. See that outside candle? That's what you call hidden supply right there. We'll talk about hidden demand because prices go all the way down below the previous low and then close at the end of the day here. So that demand is hidden. You wouldn't consider that to be demand, but it is because it's identified by the wick. So a nice CPR zone. So I think that if if prices do come back down to here, which they are at the moment, approaching that, the only thing is obviously risk off, but it's worth a decent trade if you feel that things may get potentially slightly better from a risk perspective. Worth a definite trade. If not, then you'll be looking at the absolute lows for a buy trade. And I do like this. It satisfies quite a lot of the supply and demand zone process. So we have first of all, but we have a trend line break, 1, 2, 3 candle open, high, low, close. That demand is nice, hard in, hard out. You've also got demand taking out supply. So at the time, this would have been a supply zone right there. And you can clearly see that prices gapped up, taking out that supply. Yeah, so it pretty much ticks all the boxes technically. So this lower level, this 0.8 level round number, I like it for a buy trade. I really do. Very nice buy trade there. Technical setup. CAD is a decent buy as well overall. Yep, Swiss franc. Swiss franc, Japanese yen. Again, the Japanese yen does better than the Swiss franc in a risk-off environment. There was a nice opportunity on the daily to get short. There's definitely a 1-to-1 reached. And as long as risk stays off, you can probably say that the Japanese yen will strengthen. If risk starts to ease up, then you could see a bit of a move higher. But this was a decent trade to the downside. You did have this is the second touch. So second touches are fine. Of levels, they're fine. First touch is obviously the best. Second touches are fine. And then now it starts to look like a potential manipulation. So if prices do come up to this zone, then what you're looking for is something like this. Something like that. Or you're looking for potentially something like that, and then that. And that's really more of a stop hunt setup. So again, third touches don't get drawn in, if you know what I mean. Just wait for pulling manipulation before looking at trying to get short. If you are looking at long trades, then you're really looking at anything down here. US currencies, dollar index prices did come down into this zone. Resistance, support, resistance. It's not easy to see, but I did mark out this zone here, and obviously there was a bit of a trend line here as well. Prices came into that area. Was there any kind of moving averages? 200 moving average, around below, pinged off it right there. So dollar strength came in. It's closed above. I probably want to see another close above before considering that level being taken out. So I'd leave it on there for now, on the dollar currency. And then if it starts to really if it starts to reverse sharply, then obviously supply hasn't been taken out. But I'll leave it there for now until prices maybe do another positive close above the level. But I guess again, all you're looking for really is just bullish candles to kind of show you that there's some overall dollar strength. Now, interesting, euro, Australian dollar. So a nice CPR zone. This is very tasty level. 1, 2, 3, and then you can see where prices got spiked up, spiked down. The only thing was that this was algorithm, so this wasn't really real trading on the 3rd of January. This wasn't people weren't back in the markets. They were still on New Year's leave, going into Christmas. Christmas holiday, going into New Year's holiday, etc. So this is probably just taking out all the stops above, and I don't know whether there would have been traders caught in this, to be fair. But from a technical setup, it's very nice. Underside of that level to the short side is nice, and anywhere pretty around this zone here, 65, 64.50, 65.50. I like it to the short side from a technical perspective. The only thing is that you're going to be buying the Australian dollar over the euro, and fundamentally the euro is 6 and the Australian dollar is 8. So unless I think the time to really kind of try and get short is if you're anticipating the German weakness, overall European weakness, and they start announcing a stimulus, then you're at a really, really nice level, very nice level, to look to kind of ride this down, because I think all the focus would then be on the euro adding potential stimulus. So a very nice zone. It's just fundamentally a bit difficult to trade. Euro CAD is still within this range, really. Just I would say if you're trading it, it'd be anywhere around intraday. It'd be around these boxes here that you'd need to look for any kind of sell trades. Buy the CAD over the euro. If you are looking to buy the euro over the CAD, then you're looking at the lower end of this demand zone. So there's 49 round number before looking at that, but I think anywhere up here, look for short trades or even higher. Euro Swiss risk off trade, pointed this out in the week, came up into that supply zone, sold off. I think we had also we had an extreme, nice extreme above the 94 level, so it's about 97 there. So we was at a little bit of a supply zone there as well. So that was where the supply zone came in. But it wasn't an entry because we didn't have that volume divergence, and then you could get the volume divergence on that candle there. So it could have been end of the day entry right there on a daily. If you're looking at any kind of intraday ones, I think there was 2 candle swing on a 6 hour right there, and then there was a nice 2 candle swing there on the 4 hour. So definitely a 1-to-1 trade at the moment, and then just trail your stops really and see how far this can go from a risk off perspective. We are into a demand zone now, so if you think the euro is going to get stronger, it's a really fair value between that high and that low. So pretty much, let me delete that one, from here to here. So yeah, between that low and that high. So decent for a long trade here. Also what you have is a level of support and resistance that has been broken. So you've got support, it's supposed to be resistance, and it looks like it's going to the short side, but it doesn't. Breaks up, so fakes these guys out. So it's a bit of a CPR zone. Probably might be, I don't think that'd be a 61.8% level. So let me just have a quick look. High to the low, Fibonacci. Nah, it wouldn't have been. You'd want to see it bounce off of that 61.8 before, and then that'd be the trade. But decent anyway for a long trade. But technically, I'd be looking for the lower end, this 1.12 level, and again, you'd have to really kind of wait for risk to come kind of back on, if you know what I mean. This is an interesting level because the Swiss National Bank actually said that they are, going to be adding stimulus and try to weaken their Swiss franc. And in fact, we can look at it now. Let's go to indicators, countries. They are still looking to weaken their currency. They don't like it at a strong Swiss franc, and they're looking to intervene. So if you go to interest rate Swiss franc, and let's have, this was the statement from, also it's recent, so 13th. So that was, Friday? That was on Friday. So the Swiss National Bank held its interest rates deposit minus 75% during its June meeting and introduced the SNB policy rate, which will be used now on and replaces the target range of the 3-month LIBOR previously used. It currently stands at 0.5%. Policymakers said the expansionary monetary policy remains necessary amid a highly valued Swiss franc and uncertainty around the global economy. So again, they've been saying it's been highly valued for ages. So I think they do intervene just to keep, the Swiss franc from getting more and more expensive in a risk-off environment. So yeah, I think this level here, and especially against the euro, they don't like it because they pretty much live next door, but the country's next door to the euro. So if you're in Switzerland and your neighbor next door, I don't know what is who it'd be geographically, but the euro is cheaper and your country's getting more expensive, then you're not gonna like that. It's not gonna be great for your country and your residents, especially because your Swiss franc is getting more expensive and you cross the border and they can come over and buy things for cheaper, if you know what I mean. So Swiss National Bank, yeah, that's pretty much it. So watch this level here. Definitely watch this lower level here, right? It's not necessarily a fundamental trade in the sense that you're trading the euro is 6, Swiss franc is also 6. I really do think that it's a difficult trade, but it's if the Swiss National Bank do intervene, then they're going to defend certain levels. I really do think they're going to defend certain levels. They defended it a few times here. Here's a bit of a stop hunt. That was a bit of a stop hunt as well in that area. I do think that they could probably want to defend this 1.11, 1.11. If it goes below that, I do think that they're going to try to potentially look for intervention. So they're saying it's highly valued, right? And that was on the 13th. So that was on that day there, right? They're saying it was highly valued. Price is obviously getting more expensive as they said it was highly valued on this day. So looks like a really good potential trade. Any kind of Swiss franc trades, I think, are going to be fantastic to the upside if risk starts to settle. Euro British pound, this has just gone higher and higher. Really no kind of trend line breaks. We've been waiting for some, to kind of prove there was a trend line break there, but no supply or no really demand for the euro. Sorry, the British pound again here. So if you are going to get short on the pound, it really has to be. You really have to be kind of sure. There has to be proven demand. Taking out levels of. Supply. Taking out proven levels of demand, which would be here. I think you've got. Is that an outside candle? I don't think it is. No, it wouldn't be. It's not hidden. It's not hidden if that doesn't light up or if that doesn't show an outside candle. No, so it's not outside candle. So unfortunately, but there is some demand there definitely, but couldn't draw it. But it needs to take out at least these two levels or at least one level of demand before coming back up, and that would prove that there is supply or a bit of demand for the not to confuse you, but because the British pound, you'd want to be buying the British pound based off of supply, so you'd need for that to kind of prove itself by taking out levels of demand there. It's a trend line break, hard in, hard out, and I think that's the only way I'm looking to buy the British pound. But a lot of uncertainty around the British pound and the euro at the moment, so not the easiest pair to trade. Euro yen, I'm actually in this trade, got in up top, based on basically just risk off. I'm not necessarily a risk off trader, but I think this is the pair to trade if you're trading any kind of risk off trades. There was an entry. This wasn't my entry. Mine was more of a different entry, more of a stop hunt entry. But look, there was an opportunity there. 2 candle swing on a 12-hour. Stop above the high, maybe around 59. So let's just say around here, 10 pips above the high. And then at the moment, that would have been at least approaching a 2 to 1. So you got enough to the downside for double your money. double your money trade. So a decent trade. It's a break-even trade now. But yeah, nice trade, especially because risk is off. And the yen strengthens in a risk-off environment. I think there was some other entries. Were there some more entries? I think 8, 6. Yeah, I think the 6 hour. You got move up, move down, and you've got 2 candle swing right there. I'd have preferred it, at the highs. To be fair, you can take these, but I prefer 2 candle swings to be the actual swing there. So the 12 hour would have been a nice one right there. But going forward, I think any kind of buy trades, again, this is decent. I like this level around here. Decent CPR zone, which is here. So CPR right there. You can see it on the lower time frame. Let's go to the 4 hour. You can see where there's a hard in, hard out price movement. Anyone who got in down here is now looking at getting out of their trade, and if they went short, they have to buy to exit. So nice breakout CPR. You got trend line break as well. 3 candles, open, high, low, close. So nice technically. But again, the question you got to ask yourself is why you're going to buy euro over the yen. New Zealand. Now this is a bit of a funny one. This looks like a stop hunt. It really does. And I think this is stop hunting traders who put their stop losses above that. So if you saw this again real time, if that's all you saw, you got resistance, and then you've got a nice pin bar. You're putting your stop loss where for everyone to see. Everyone's going to put their stop losses above that. So I think what is happening is you're getting a bit of a move higher to take out anyone who's got tight stops and potentially could roll over. We've got, I think, GDP for the New Zealand dollar this week on Wednesday. Yeah, GDP New Zealand dollar. So if that comes out as decent, yeah, this could be a nice trade to the downside. Very, very nice trade. But again, it might actually spike up to this supply zone before looking at short trades. What I will do is I'll probably do some intraday analysis on like the 30-minute. At some point, do a separate video on potential stop hunts. You can see where, if you go down to maybe like a 15-minute, where you can see it's starting to look like it's touched once, twice. Yeah. We've got a bit of a level here as well. Right there. So what you could see, you've got a bit of a range as prices start to range as we approach the some GDP numbers, and then it could do something like that, spike up, come down, and then that's where we look to enter and then trade it to the downside. So you could get a better entry this week as we've got some Euro news and we've got some New Zealand news. I'll be watching closely on this one. This could be a very, very nice 15, 20 to 1, 25 to 1 type trade, depending on depending on how we enter, where we enter, depending on the stop loss as well, etc. So in our targets, so yeah, decent. And if the euro starts to introduce stimulus or start to plan for stimulus, then yeah, that's very nice. Keep going. Euro dollar. So prices came up to this area here. Nice outside candle on a daily, and prices have really sold off. Again, once, twice is okay. Again, it's got a lot of traders caught simply because of the non-farm news from last week. So there was the non-farm news. Prices just fell, didn't go higher, and then a bit of a CPR on a lower time frame. So that was where the non-farm traders would have all got in, and then find themselves down here, and then not necessarily the greatest CPR because it didn't really take out any structures, but fooled a lot of traders to the upside. So I think a lot of them probably just bailed. That's just the reasons why. Why is the euro going to get stronger against the dollar? That was a nice entry, that 8-hour candle there. Nice little double top formation if you enter on that, and then to the downside, 6 hour, 4 hour. I think that was like a 2 candle swing there. Yeah, 2 candle swing on that one as well. So decent to the short side. And we are where we are. So in the week leading up, this is a demand zone here. Demand. So we could see prices start to turn up here on some dollar or some anticipation of the dollar. Cutting rates, or if prices do come down to here, then that would be the area. But we've touched this level how many times? Once, twice, 3 times. So there we are. That could be a nice, but it could be basically due for a drop. So you're looking at prices coming down, prices maybe coming up, and then it just continuing to go down as that level was touched a few times. So that's pretty much where the play is. If prices do come back up and there are some shocks in the market, again, look for stop hunt trade there. So you're waiting for price to do something like this, like that into this nice supply zone as well. Anything in this supply zone, I think, is going to be a sell trade for me anyway, regardless of what the dollar does. The dollar would have to really kind of shock markets and start to fall from grace before I think about shorting or buying the euro against the dollar. Pound Aussie, again, you got 8 versus a very sentiment driven currency at the moment. So if you are getting short here, that'd be purely on Brexit sentiment and thinking that the pound is going to be worse off, and you're buying the worst performing currency on the fundamental analysis spreadsheets, and not necessarily the best fundamental trade. But I like this as a decent setup as far as a short, but I'd probably be looking for, and let's see on the divergence. Yeah, we're actually at an RSI extreme as well, so very nice. Just don't like the pair, it's not as clear. Last week we did have again an extreme as prices came down into this level, and then we had a nice entry there. Very nice entry, matter of fact, on that bearish candle. If you would have bought the dollar, that is, long position there. Place your stop loss on this currency pair. You'd have to place it at least 15 to 20 pips. So 23, let's just say that was 38. So that's where your stop would have been. Around here, and look at that for a trade. Very nice. But again, you'd have to believe that the pound really is going to get strong. It did look good to the upside. I did like this level. I just couldn't bring myself to buy the pound on Brexit sentiment, especially because obviously the Conservative Leadership Party contest as well, Prime Minister contest. It's I think it's probably more profit taking and taking advantage of, but a very nice trade into that demand zone. That's pretty much textbook. Anyways, British pound CAD. CAD being stronger with a 2. Let me just rewind. So again, looking for, if you're looking to buy the British pound, it would be a on news, the Canadian dollar is stronger, much stronger than the Australian dollar. So you can see, while the effect of the pound on the Australian dollar, because Australian dollar is number 8, the CAD on the other hand, was number 4, so you didn't see that much strength from the British pound against the Canadian dollar. If you are again looking to trade this, you'd be looking for few candles broken above, and then looking at prices to come down and then do something like that. So that's not too bad, but again, buying the British pound, I'm probably waiting for price to come up here before looking at selling. So that'd be where I'd be, my bias is. British pound, Swiss franc, again, really no demand here at all, even though we've had a bit of a trend line break. No demand here, it's just gone sideways. So until prices really start to come up and start to start to really kind of take out levels of supply, then you start to look for maybe some buy trades. But until that, if risk is off, you're looking at sell trades here, and you're looking at sell trades there. Just keep in mind as well, intervention on the Swiss National Bank potentially. British pound, Japanese yen, again, risk off. You can see where it's starting to they're starting to sell off. Be waiting for prices really to come up to this zone here before looking at a bit of a sell trade there, a sell trade here, while risk is off. Again, trend line break, but there's really no demand here at all. We've got 3 candles open, high, low, close, clear, but it hasn't taken out any kind of supply. So, and it's just rolled over again. So, a bit of hard in, but not really hard out, to be fair. Pound New Zealand. I do think this is a decent trade to the short side. I like this to the short side here, just slightly higher. I think it's actually, matter of fact, I think right now would be a decent trade. To the downside, just ahead of the CPI news for the pound, and also the New Zealand dollar. And I think even though CPI for the pound may start to increase, again with Brexit and the uncertainty, it's just going to put a downer on the British pound. So I think a short from now, or if prices start to come up into this little zone here, then look for any kind of short trades. If not, 95, 96 levels. And that's purely based off as well. That zone is a bit of a CPR zone. I'll show you quickly. We've got a level, right? Clear level there. Looks like it's working. Double bottom, looks like it's going higher. You get a wick, that looks like your nice bullish candle, and it flips on them. Look at the volume on that candle as well. Nice, people are buying in here, and it flips on them. They don't get out, can't get out. They're stuck, captured in their position. So when prices come up, you start to see now a bit of relief. So I think the relief is taking place right now. We're in the supply zone, 1.94 round number as well. I like this for a short. If you can get a decent 2 candle swing outside candle into next week, then I think that this is a decent sell. If not, again, if it doesn't work out, just I'd say short around these levels here. Well, that's what I'm going to do anyway. And look for short trades, again, depending on what the New Zealand dollar does as well. So I know the British pound is number 2, but like I said, Brexit sentiment is gonna really kind of ruin that. Pound dollar. This is a trade we got involved in. This was hidden supply. Got involved in this trade. That was supply there. From a daily perspective, again, I point this out weeks in advance. So looking for any kind of short trades within that capture pain relief zone. But what we saw as well is also on the lower time frames, we saw CPR. So you've got a level here, or stop hunt CPR kind of thing. Stop hunt was this, right, where you had a level 1, 2, 3, hunts to stops, then collapses. When prices come back up to this zone, this is where to get short. On the 1 hour, you can see where, everybody got long here. And why they get long? Because of that non-farm number. Everyone was getting long. You can see the big candle here, and then it fails on them. And it even takes out structures, which is what I wanted to see. So there was a few levels that it would have taken out. You've got one there, where price started to come down. Looks like it's going higher, and then it takes that out as well. Takes out a few lows around here. Starts to even go lower. Takes out that one there. So if you're here and you're seeing prices, you're thinking price is going to go higher, but then price starts taking out lots of structures and support zones. You're thinking the trend has ended, right? It's reversed on you, pain, etc. Price come back into this area here, and then nice short trade around here. So very nice trade on an intraday time frame. The bigger time frame is still valid if prices can get up to this zone here. I do like that for a nice short, but with the pound being as it is, don't know. But again, prices can kind of do anything they want. I think this is a nice. What day was that? 3rd of January. Okay, so that was the algorithms. I was going to say that would have been a nice, very nice CPR zone towards the lows, but I don't think anyone was really in that apart from any algorithms. Traders are going to be trading this, but it's just it's not going to be true trading, if you know what I mean. I want to see the human element to it. New Zealand CAD. So I think this is a decent buy. Let's get rid of this one. You've got New Zealand is 3, Canada's 4. There's not really much between them. Actually, it was 29 and 33. So I think this may be, if the New Zealand dollar comes out this week and the GDP is as expected, I think this is going to be a very nice trade to the upside. Yes, the Canadian dollar is also, decent and strong, but if the Canadian dollar is quite decent, but also we have CAD CPI. So if CAD CPI comes out and it's not good, let's say for example it's supposed to be expected at 0.1 and it comes out at 0.1, that could be a catalyst that pushes prices higher, as far as the price moves higher here, because when you're here you have to decide and you have to kind of really think about what is going to push prices past what would be considered a previous cheap for the New Zealand dollar, but this is an expensive area for the Canadian dollar. The sentiment has to shift as far as what is going to make the Canadian dollar seem a bargain here, so that it pushes prices even further down, because buyers of the Canadian dollar at this level, they're going to have to think that this is a bargain. The only way to think that this is a bargain is if something totally unexpected comes out. The Canadian dollar's economy is fantastic, and then the New Zealand dollar starts to look very weak, and their numbers come out very weak. So then that's where you get the kind of breakouts and sustained breakouts. But this is a crossroads at the moment. So again, this is I like this level. I really do like this level as a buy, but we would need the fundamentals to really kind of confirm this type of thing. This is the kind of thing where you look at your plan and you look at pre-trades. So you say, all right, then if I'm going to put a position in, do I put in half a position? Do I put in one position? Do I put in a quarter position? That's where your plan comes in. Pre-trade, post-trade. So you can always add in depending on your entries as well. So I think this is a nice area to look for potential buy trades. Two commodity currencies against each other. You're buying the stronger of the two. So the probabilities should be on your side, and this should be, hopefully, prices have been trending for a little bit as well. If you're taking that to there, 3 candles open, high, low, close of that. It's taken out a level of supply which is there, hard in, hard out. Textbook trade. This is what you call the textbook technical analysis. So I like this. I really do like this to the upside. But again, depending on what happens fundamentally. So let's see. New Zealand Swiss franc, again, risk off. So we didn't really see much demand. Yes, we got trend line break 1, 2, 3, but really no demand there. Again, price come down. Got a little bit, another bit of a trend line break 1, 2, 3, but again, nothing taking out any kind of supply, and then risk off. Obviously, the Swiss franc strengthens. So again, you'd want to see risk come back on or less risk off. I think that's going to be where it may want to look for potential buy trades in and around this zone, the 65 round number. And I think this actually, from a daily perspective, looks like a little bit of a stop hunt. So you could see prices do something like this. Like that. Bounce, look like it's coming off there, and then start to move higher, depending again on risk off and what the New Zealand dollar does. But I think this is a nice area to look for some long trades. It's just risk off sentiment. If not, you want to see this occur, right? Trend line break, 3 candles open, high, low, close. You want to see hard in, hard out. That supply zone, because this is now a supply zone here, get taken out. Yeah, these supplies, well, at least that first level of supply get taken out. This around the 0.654 level get taken out, and then wait for prices to come back into this area here before looking to get long. Did I cover this already? Okay, no. All right, same thing, Japanese yen. Risk off down into a level, but wait for pretty much the same thing, and then back down into that zone. And when price come back down into this zone, that's when you'd be looking at potential, you'd be looking at the news and saying, okay, well, is risk on, is risk off, is it less risk on, is it less risk off, etc. New Zealand, oh, what a lovely trade this was. Again, if you got in short around here, and very nice trade. Don't know how many of you got into that one, but again, that would have been a very brave trade for you to get involved in, considering the non-farm numbers. But it was a trade that was planned well in advance. Support, resistance, support, bit of resistance here. Prices came up into that zone, here, spiked up. You can see it, and then it was just a case of it falling away. So now, again, you'd be looking at potential, if you wanted to buy trades, but with the dollar being quite strong, most traders aren't going to look at this candle and say, I want to stand in front of that. But from a fundamental point of view, Has that just changed? I think it was a 20 something before. I think it might have changed. I'm sure this has changed. Yeah. So if this starts to increase, yeah, then you could be looking at a a decrease in dollar strength. All right. So again, a nice zone for you to look to buy. But again, we've got some other things going on. New Zealand GDP, etc. I think this lower level is probably the better level. So the 0.64 if you're looking to buy this. From a sell trade perspective, I think that's probably your supply zone there. Another one there. Made a new lower low there. So yeah, I think that's pretty much it. You have to wait for price to really come back up to here before looking at short trades. Dollar CAD, right. So looking at any kind of short trades from here, buying a Canadian dollar. I like that from a CPR perspective because you would have had support. Looked like it was, that nice pin bar, and then it just collapses. So from a technical setup, this is fantastic. Like that level CPR right there. Only thing is that you're buying a Canadian dollar, so you're buying 1 against 4. Not fantastic, but again, you could see some dollar start to sell off as potential increases in bets that there's a rate cut, or just basically profit taking. It should be pure profit taking from the from last week starting to go into the following week, because again, the markets need a catalyst as to why it wants to go higher. All right, so there could just be some profit taking going on here, and you could take advantage of that if you see anything on the lower time frame. So that'd be the lower time frame there, and look for some entries. So if you're looking to buy, definitely around here, because you can see where you had this hard in, hard out. You have touched that level a few times though, so it's not a fantastic level, but you did get kind of like a gap down, move back up. So I do like it. Prefer this level, to be fair, but this level's touched once, twice, 3 times. So maybe if you are looking to trade this level, you'll be looking at something like that, and then a manipulation, if you know what I mean. So wait for manipulation around this lower end here if you're looking to get long on this pair, because you've got a range from that high or that low to that high. VR2, yeah, so that's where prices are ranging between at the moment. So yeah, manipulation around this low before looking to get long, if not down at the lows. Then we've got dollar Swiss. I've been wanting to get long on this currency, but I was hoping that this week prices would come down into this demand zone here, but obviously prices have gone higher without us, or without me, and but it's created a demand zone. That's what it's created. Made a new high, higher low. There we go. So higher highs, higher lows. Demand zone right there. Last bearish candle before prices make new highs. So now what I'll be looking for is prices to kind of come back into this area here before looking at long trades. If you're looking at shorting, then and there's also another demand zone here as well. If you are looking at short trades, you have to really kind of wait for the price to come up here before looking at the short there. If not, around here. But I do like this. Do like these zones. This 98, 97 areas. Dollar yen. Right, it's dollar yen. We stuck really between this range and this high and this low. Dollar has increased in a bit of strength, but the Japanese yen, as you can see, is risk off. and it's also as strong as the the US dollar. So you can see where you've got two strong currencies competing against each other. Over the past couple of weeks, you're just seeing sideways movement. So in order for you to really get, start to look for long trades, you could have looked for long trades. I think it's around here. I think I might have deleted the demand zone. Yeah, there was a demand zone here. I'll put it here for now. So that was a decent demand zone to get long on the lower time frame or even that time frame. But I think if you want to look for the overall bigger picture longs, you have to wait for prices to kind of break out of that level, come up into here at least, and prove that there's some demand around here. At the moment, demand just seems to be kind of staggered. It's not hard. It's hard in for sure, but it's not hard out. So is there really proof of buying? Is there not really? I mean, there is, but it's not necessarily the strongest demand, if you know what I mean. So you want to see prices kind of come up and then kind of come down into that area before looking for buys. Again, you've got 3 candles, open, high, low, close beyond obvious trend lines. And if you even get prices taken at that supply zone, that'd be even better. And then look for long trades. So I think that's about it. Dow Jones Dollar Index pretty much is just price came down into this demand zone. That's gone now, definitely gone. Yeah, I think that's really about it. So guys, I will see you in the room Sunday, probably Monday. And if you do have any questions on Sunday, I mean, even if you don't, say hi. The room's gone a bit quiet as well, so definitely post some charts, some setups, anything you want, news as well. Again, if you want to have any kind of one-to-one talks with me, let me know and we can start to organize something, and we can look at your trading and see what's going right, what's going wrong. Yeah, if anything is going wrong, not necessarily wrong, but improvements, etc. So anyways, I wish you all a great weekend and take care.